Dear viewers, welcome to yet another edition of Your Life, Your Money. What's the topic that I have brought for you today? People think financial planning is all about getting a big rate of return. Financial planning is all about building big amount of wealth. Is it the truth? If you carefully analyze, probably this is not the correct way to describe financial planning. Financial planning is all about de-risking various things that might happen in your life. If you are able to de-risk your life, you have created a beautiful financial plan for yourself. Let's look at the 10 different types of risks that your life will go through and how you can de-risk and create a beautiful financial plan in your life. This is NRI Money Clinic for you, and I am Dr. Chandrakant Bhatt, your financial guide for a happy living.
NRI Money Clinic. No hype, just the right advice.
What is the de-risking model of financial planning? The model involves identifying each and every risk that you will go through in life and take meaningful measures to de-risk that particular event. Let's look at all these risks one by one. Risk number one, the risk of dying very early in life. You could be in the beginning phase of your career, 25, 30, 35, 40 years of life. You have a 30 years of work life when you started your life. You could be working with a salary of 50,000 rupees or a lakh of rupee or whatever could be the salary bracket you are in. Think for a while. You are earning a lakh of rupee per month and you have 12 months in a year, you earn 12 lakhs. If you have a 30 years work life, 12 lakhs into 30 years, 3.6 crore is the human life value that you have. If anything happens to you by way of an accident or death due to any reason, your family, your dependent, your wife, your children could lose this amount of money. You have planned your life, you wanted to buy a house, plan for your retirement and various things in life. If you die early, then all the plans can go for a toss. How can you de-risk it? Buy life insurance. When you buy life insurance, don't buy life insurance because this is a particular type of plan. Do not buy a life insurance for 1 crore of rupee. The right way to do the life insurance is actually calculate how much of insurance you need. What is your human life value? What are the liabilities that you are carrying? Evaluate what might go wrong in the unfortunate event of you being not there in this life, and make the calculation and allocate the resources and buy that life insurance. Second risk is risk of suffering a critical illness. A critical illness is a disease or a problem that you will suffer, but that will not kill you. But it is worse than death. It is literally living death. If a person suffers from critical illness, then he cannot work. Your employer says it's a commercial organization. We cannot keep you on the rolls because you are not able to discharge your duties. You have to pay the rents, you have to pay the school fees, you have to pay your EMIs, everything is normal. The only thing is you will not have a job. And this is a major risk. People confuse buying a critical illness insurance with health insurance. I have an health insurance. Health insurance and critical illness insurance are completely different. Health insurance pays for your hospital bills. What is a critical illness insurance? Critical illness insurance will pay you a big lump sum amount of money in the unfortunate event of the policy holder suffering from critical illness. There are 36 critical illnesses which have been described as of now, and most policies cover these eventuality. Life insurance is a death insurance. If a person dies, then the insurance company pays. A critical illness insurance is a living insurance. Life insurance you buy for the sake of dependents. Critical illness insurance you buy for yourself. If you are a single bread earner in the family and you don't die and you suffer a critical illness, the family, this is the worst thing that can happen to a family. It's just not that the life insurance you should buy. Make sure you buy sufficient enough critical illness cover. Buying life insurance is pretty cheap, but buying critical illness insurance is quite expensive. It is said that if a person suffers from critical illness, it takes anywhere from 2 to 4 years for him to come back and rejoin the job, if at all, if he comes back and joins the job. So the ideal critical illness insurance cover that you must carry is at least 2 years of your annual income. Maybe if you can afford, you can take it up to 4 years of your annual income. Risk number 3, risk of low earnings in life. Everybody starts with a small salary to begin with. That's quite normal. Nobody will start with a very hefty salary unless he is such an extraordinary, brilliant mind and got scores and organizations think that he is of value. But otherwise, it's normal that people start with a low salary and climb up the ladder. But if you do not do certain things in life, probably you will suffer low earnings throughout your life. What are the things that you should do to come out of this risk of low earnings? Number 1, add to the skills. See how you can improve the income at a family level. If you are a single bread earner, you think about whether your wife can also take up some employment and increase the family's total earnings. That could be one thing. If you have a job, think about changing the job, whether that can push up your earnings at a family level. Add a skill, do a course, do something which can propel you into a higher level. Become a most valuable employee of your organization, so the organization will also be interested to promote you. Do anything to come out of this low earning problem and constantly try to increase your earnings. You can also do a second job. You can also see if you have a passion and beyond your office hours, if you can create some income using your passion. It could be a dancer, music, anything could be fine. That will all help you to generate a better level of earnings in your life. Risk number 4, risk of stopping or loss of income. Now we have seen in the recent past how pandemic created a panic in the lives of so many people. Organizations have to be shut, they could not pay the salaries, people lose jobs. Now we are seeing in the US, in the IT sector, so many people are losing their jobs. These days, the jobs are not guaranteed. You should be prepared for this eventuality at every point of time. Loss of income, loss of job is a risk with which you have to constantly live with. How can you conquer this risk? Simple. Build your emergency funds. When you earn, you should dedicate a certain amount of money as an emergency fund and keep it in a designated place. How much of emergency funds to build, how to build, where to park it, what way you should place these funds. We have a detailed video on our channel. You can visit the emergency funds video which we have done earlier and can be guided on that. Risk number 5, risk of living too long. Living too long is something you can celebrate, but it's a huge risk. A risk of dying early can be mitigated by a life insurance policy. There is no policy which can give you protection for living too long. It is your responsibility to make sure that living too long doesn't end up as a big risk. You live long, but if your money does not last long enough, then that can be hell on earth. So how can you conquer the problem of living too long? It is by proper retirement planning. You retire at 60 and you live up to 90 years. That means you will have roughly 25 to 30 years of retired life. Retired life, in other words, is known as a period of joblessness, a period of no salary. While you live is a good thing to cherish, not having an income is not so good thing. You should be preparing yourself very well for this period of unemployment. Do the retirement planning in a proper way. We specialize and we understand every bit of retirement planning. We have worked with thousands of families. We have helped thousands of families in more than 6 countries to build the required retirement cash flows for them. Are you the one who is concerned about the retirement cash flows? We can help you with that. You can make best use of our services. Our number is shown here on the screen. Through a WhatsApp message, from any corner of the world, you can send message, and our team of experts are ever ready to help you to build a good, robust cash flow to take care of your long life post-retirement. Don't delay. If you have an interest, send that message now. Risk number 6, risk of higher expenses throughout the life. In the initial phase, the life is very good. You have a small salary, you don't have a family, you are single, and you can manage. Then comes a phase wherein which you get married, then the setting up a family takes quite a bit of amount of money. You conquer that stage in 3, 4, 5 years period of time. Then life again looks to be good. But a phase will come in your life. Most cases it is post 45 years of your life where you see you are progressing well in your career. Simultaneously, expenses are also catching up. You have a higher income, but the expenses are rising. Why are the expenses rising? The expenses are rising because you have an EMI to pay. Your children are growing. You have moved up the lifestyle ladder. You have a bigger house, the maintenance of the house, the maid, the lifestyle, all these things will consume a lot of money. Most people will find this particular problem. I have a higher income, but I have a higher expense too. How can you conquer this risk of higher expenses during second phase of your career? The answer to that question is, when you are in the beginning phase of your life, you should consciously try to build a second income out of your savings. It can be designed in multiple ways. You can buy a real estate and create a rental income. You can buy stocks and you can get a dividend income. You can have some plans which can give you regular stream of income beyond 45 years of age. There are multiple ways to create a second income which is possible. In your planning, if you are able to build a second income to cater to this higher expenses during second phase of your career, then your planning will be successful. Otherwise, you will see I'm earning a lot, I'm spending a lot, it is back to square one. Please do de-risk this problem of higher expenses during second phase of your life by adding a second income. Risk number 7, risk of loss of purchase power of our savings. Many people do not understand this particular problem. People are so scared about investing money in the stock markets or mutual funds or some other instrument which can beat inflation. They only keep accumulating money in a debt fund or in a bank FDs. They keep stacking up their savings. The bank FDs are very inefficient ways of saving or investing your money. When you keep all this money in the bank, what happens is it will not beat inflation. It remains safe. The interest what you get may be keeping pace with the purchase power, but if you are a person who is paying taxes, make no mistake, it will erode the purchasing power of your money. You should be conscious enough to see that your savings will beat inflation in the long run. If you are a retired person, you don't have to worry too much about it. Even for a retired person, retaining the purchasing power is very, very important. But if you are a person who is in the early phase of your career, or if you are in the middle of the career, your savings should be positioned in such a way that they create wealth. They do not go through erosion of purchase power because it is not beating inflation. Please do de-risk this particular point and make sure your investments earn more than the inflation. Risk number 8, risk of children failing in life. Parents take extraordinary care. Parents make a lot of preparation to fund the children's education. Parents think sending children to a good school, getting good ranks will make sure that the child will succeed in life. This statement is not fully true. It is partially true. It is true if a child studies in a good college, get good grades, it may get a good employment. Is that just sufficient? The answer is no. Your child requires more than that. What makes your child successful? Many things are beyond education. A lot of things has to do with the parenting. Number 1, good moral education makes your children acceptable to each and everyone. The soft skills, ability to mingle with people, building leadership skills, and extracurricular activities will all help you to gel very well with the society. Identifying the passion of your child need not be the best in school. It may not be good in maths, it may not be good in science. But your child can be good in other faculties as well. It could be a good musician, a dancer, or culinary arts, or find out what is that your child is showing interest in. If you are able to identify the passion of your child and you can direct the education towards that particular passion, then your child could succeed in life. Your children should also learn how to cope up with the failures. Don't tell children that they have to succeed all the time. But when they fail, give them the technique, give them the confidence, how they can come out of it. Children must learn from their failures. Coming out of failure is an important trait and it's an important learning for children. This will make your children successful in life. It's just not money, it's just not the school, it's just not the grades, it's just not a good employment which will make your children successful in life. Most of the things that will make your children successful are beyond the course that they study. Risk number 9, risk of conflict of interest. Conflict of interest can come at every stage. Should I do education funding or should I set money for retirement planning? Should I buy that site or should I buy jewelry for my wife? Should I do the savings today or can I do it after 5 years? You take any situation, there is always a conflict of interest which is visible. To come out of this conflict of interest, proper modeling is required, proper compartmentalization is required, external help is required. You need the services of a financial planner to help you with what decision you have to take and how you should allocate the resources. Engage a financial planner. They are best to help you with resolving this conflict of interest. The last of the risk. This is not an exhaustive list. I have listed 10. There are many risks people will go through, but I'll end this video with this 10th risk that I'm going to talk to you. The risk of bad habits. You will not even know you will get into a bad habit. These days, open the YouTube channel. How many people tell you buy cryptos? How many people tell you buy futures and options? You can make money out of it. Without your knowledge, you may be getting into a financial bad habit. Excessive use of credit cards, excessive taking of loans, trading, cryptos, all the borrowing money from friends and relatives. All these are financial bad habits and they can take you down the drain. Be conscious, constantly avoid. If you are doing something, think about it. Is it habit forming? Have I become a victim of this habit? Consciously come out of it. Consciously avoid getting into a bad habit. Then your financial life will be fine. Otherwise, the bad habits, if you inculcate in your life, your financial life can never be normal. Dear viewers, hope the video that I have done today helped you to understand what all the risks you might encounter in your attempt to do the financial planning. If you follow these steps, you will have nothing to worry about. If it did give you a new direction, please like this video. Are you the person who is watching this channel for the first time? Or if you are yet to subscribe for the channel, please hit the subscribe button and press the bell icon. Don't forget to share this video with your near and dear ones. Thank you very much for watching this episode on NRI Money Clinic. I shall be back with you with yet another thought next Friday on Your Life, Your Money. Till then, stay safe.
Press the bell icon for more details and subscribe our channel.